We're half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Good morning, Dave. Morning. Our top stories today: a positive start for equities across the region as investors look ahead. You have some key policy decisions, of course, from the Fed, the BOJ, and the Bank of England, as well as a lot of big tech earnings. Also ahead here in shows, Kamala Harris raising $200 million in her first week as a presidential contender, while a shortlist emerges for her choice of running mate. And Italian Prime Minister Giorgia Meloni, of course, pledging to reset bilateral relations with China in her first official visit since snubbing the Belt and Road Initiative.
All right, happy Monday. It is really the calm before what is going to be a pretty interesting week, to say the least. So everything from central banks. It's going to be 32 hours of a whole central banking spree to U.S. tech earnings and the like. So certainly a lot on tap as we wrap up and kick off this week, I should say. But really, we're starting to start the week on a pretty good positive note here. We're up about 1% when it comes to equities in the region. Taiwan, certainly after catching down on Friday from that tech rout, is recovering just slightly. And there you go. The Nikkei 225 is up about 2.5%. The few hours into the trade. So certainly that's one to watch. We talked about those central bank meetings, right? So the pound and the yen is probably the most at stake here, given these two currencies have pretty much outperformed for much of the week and really anticipation. But it's really a coin toss when it comes to the BOE. We'll see what the BOJ does later on this week as well. But Treasuries, of course, still on course for its third straight month of gains when it comes to bonds in the U.S. So certainly that's one to watch. We're watching oil markets as well after we had 3 weeks of drops. Now we're seeing it, Brent above that $81 a barrel. There is some Middle East tensions to deal about over the weekend. We also have an OPEC Plus meeting at the end of the week as well. But metals continue to see a bit of weakness there in iron ore prices, for example, this morning. Flip the boards. U.S. futures, though, are still pretty elevated this morning. The fact that we saw a bit of recovery on Friday maybe helps that, given that there was such a big shift in risk sentiment, Dave, everything from commodities to tech stocks to carry trades, you got to wonder, is this rotation trade over? Golden Dragon did this on Friday. We still see a bit of upside when it comes to maybe China here this morning. We'll see, right? This is what futures are looking at after we did see some industrial profit numbers, which actually did show some improvement in June out of China. So that's certainly one to watch, whether that actually changes the narrative in any way. Also, when it comes to the CGB markets, right? Those 10-year yields did hit a record low on Friday. You continue to see this rally take place. We're at 217 levels for your CGB 10-year right now, and the currency at 726 levels. You got to wonder, if we see any sort of disappointment from the BOJ, what the heck's going to happen to renminbi?
Yeah, well, we can worry about that on Wednesday, I think. So 70% probability is priced there for a hike out of BOJ. I mean, to Yvonne's point, right? So the PBOC took that window of the drop in the dollar to sneak into stronger fixes, of course, coming through last week. So we'll see what the fix looks like today. 217, as we were pointing out, on the 10-year yield. That's a record low. Effectively, 2.41% is the 10-year. So a flatter curve as well, following what's been, 2-3 weeks of steepening. Right, that takes us straight into the agenda today. So the CGB rally is top of our list today. You have a specific level to watch on the Hang Seng China Index, which is 5963 spot something, but we're rounding things up. It's Monday. That is, I believe, your 200-day moving average as the next support level. MSCI China Hang Seng Index are both below that, their respective 200-day MAs. Winding up hearing, of course, an update on that coming through, and of course, Wuxi AppTech earnings, and we'll see what the reaction is going to be from CATL, which reported, of course, on Friday, a jump in profits there. And to Yvonne's point, we're up 3.6% on June. Industrial profit numbers came out on Saturday. Right. Speaking of, it's a big week for central banks, a big week for earnings.
It's big. You can't really kind of underestimate the event risk, really, not just when it comes to central banks. Let's start with the central banks, right? Of course, you have the Fed, you have the BOJ, you have the BOE. You have one, with the BOJ, we're wondering if they're going to be able to hike, as they also talk about maybe, bond buying that might be reduced. Can they do both? Then you got the Fed. Are they going to signal or at least open the door for a September cut? And the BOE, I think it's a bit of a toss-up as well there. So certainly those are the big ones, but then there's also a lot more within the Asia region as well. And then there's the Mag 7. We continue to see those U.S. earnings continue as well. First on deck, you have Microsoft Meta. On Thursday, you're going to get Apple, Amazon, and Intel. I forgot to even mention we have China PMIs this week as well.
Yeah, so I think we've calculated the market cap reporting this week. It's 15 trillion, so including the large caps and including some others as well, 15 trillion in the United States. So, and the NASDAQ, right? Keep an eye on these levels because we're about 2% from a technical correction there. So, I mean, these guys better deliver, and then we have to wait a few weeks, of course, before NVIDIA reports in a couple of weeks. Let's bring in our first guest this hour, AXA Investment Manager, CIO for Asia, ex-Japan Core Investments, Ecaterina Bigos. Nice to see you and good morning.
Good morning.
It's not going to be a boring week this week, isn't it?
Not at all.
What's top of mind for you?
Well, I think top of mind, as you've rightly said so, it's a busy week on earnings, and I think the eyes will be on delivering on the investment or the capital that's put into development of AI for all of these mega cap stocks. We've had some disappointment last week. Certainly the Fed is important, but the trajectory is quite clear. The likely cut is going to be in September, and I think some guidance around that and reassurance will be important. And BOJ, I think it's more in terms of the reversal of some of the carry trades and the effects, which can trigger some additional volatility in the markets. Yeah.
What do you make of this rotation? Do you think there's signs that it's over, or do you think that there's more to come, just given how frothy some of these asset classes were, whether it was tech stocks or even commodities alike?
Yeah, and you rightly said so. I think some of the trades were frothy. I think the investors were leaned into some of the trades quite concentrated. We need tech, AI, and certainly the Japan trade was very much the favorite for a lot of the investors. Now, when it comes to taking some of those profits off the table, I think it's warranted, and I think it's rightly so, considering that we entered in a slightly different, potentially, turn in the cycle. But if you look at the expectations for earnings on tech stocks and the deployment they've done in AI and development and the R&D that they put in place, there's still expectation for earnings in that sector is expected to be higher than the broader market. So to say some correction is warranted, whatever this is going to be a full rotation into a smaller to mid-cap companies, I would say it's premature until we see the central banks full in their way to normalize monetary policy to allow for leverage to come back into the economy for the broader companies to start deploying investment and R&D themselves. Yeah.
Right. I mean, to your point on easing, I mean, the meeting this week on the Fed is maybe a non-event as far as an actual move is concerned, but September looks fully priced for a cut. Do you think we will get a cut over the next two meetings at least?
Yeah, and I think it's a window that they've managed quite well. And if you look at the CPI data has come in line, I think it's important the job data is coming in line as well, which is very, very important. And when it comes to the ability for them to move, I think September is an ideal window, considering that we're going to have a period, obviously, of election where I would say not necessarily that they're not going to move into election year, but it's obviously the attention will be on different parts of the economy.
There seems to be more of concerns about global growth now, whether it's you're seeing signs of maybe softness in the U.S. data. China, obviously, we saw what happened in the second quarter. Do you think what's happening in these markets, this rotation, is it purely just on the growth fears? Or do you think the politics are really what's driving this volatility here right now?
I would say growth is, if you look at where the flows have gone for the last 2 years, GDP wasn't exactly the driver of where the flows have gone. If you look at Japan, the GDP growth has been quite subdued, but investors have deployed into Japan despite of that, because there were the sentiment I've talked about in the previous sessions, the importance of sentiment and the belief that Japan is getting out of the vicious circle of disinflation. And obviously some of the reforms that were put in place, the AI has helped, the weakness of the currency has helped. So there's other elements related, not just the growth that is driving that flow. And I would say GDP, I would say to the least regard, has been the driver of that flows globally.
Right. So what would be then the primary catalyst then for equity market? If it's not growth, what would it be? Apart from central banks, which we talked about.
Of course, central banks is one of them. And this is quite important because, as I said, for the broader markets to recover, we need to see the leverage coming back into the economy. Right. The household borrowing, the companies borrowing and deploying, being less conservative. What we've seen over the last 2 years, companies have preserved their cash on the balance sheet. They've been less shareholder-friendly, more bondholder-friendly, preserving that cash and being more conservative with that deployment to R&D development, with exception of those mega-cap companies that still have sufficient capital to deploy. So that leverage coming back in the economy is very important. And then other elements related to, of course, geopolitics is playing a role in terms of where the consumer confidence or the investor confidence is for deployment into risk assets.
And for China, I mean, you still think that we could be set for some sort of technical recovery? What's going to drive that?
I think this is what we've seen in China. China's, of course, it's structurally challenged with the leveraging economy, the property market, and then obviously the macro dynamics is quite weak. We obviously have a deflationary environment, consumer confidence is weak, investor confidence is weak, also as FDI foreign investment, as well as the home investment is quite subdued. So China is dealing with that structural and macro weakness, which is risking to be somewhat more ingrained into the economy if the policymakers are not moving to support the economy, particularly in places like consumer confidence and investment confidence. And I would say in the second part of the year, with Fed moving, there's scope for China to have more room to maneuver in terms of the monetary policy. We also expect for the fiscal support to come a lot more proactive and a lot more stronger in the second part of the year. The first part of the year, I would say, it was subpar in terms of the expectations of that fiscal support.
So what is the specific exposure to China that's appropriate at this point?
I would say for China at the moment, still staying in quality is appropriate. Companies that are less exposed to some of the elements related to geopolitics. As we've seen in the prelim, the main focus for China at the moment is supply security, technological development, and green energy. So we've seen the investment being deployed into those areas. We've seen industrial production, of course, being positive, also manufacturing and exports being positive as a consequence of that. So those areas I still expect to stay supported. When you look at SOEs, certainly expect to stay a lot more resilient than private enterprises, but expectations and the hope is that more to be done in supporting and giving guidance to the private enterprises to recover. But I would say it's probably a story that is more in 2025 and onwards. Yeah.
All right. Ecaterina, thank you so much. We'll have more with Ecaterina Bigos, their CIO for Asia Ex-Japan Core Investments at AXA Investment Managers. We're also counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong. How many of you are staying up to watch the Olympics? You guys probably are a bit tired.
Yeah. Well, thank you for joining us half asleep from your bed this Monday morning. Good Monday morning. Welcome back. You're watching the China Show just in time. We should be getting the midpoint of the day any time now. So the estimate is 725.27. The range of the survey 725.13 to 36. So that's 23 pips. And we are getting the fix now. 713.16 there against the U.S. dollar. And this seems to be largely along the trends of what we saw last week. So. Yeah. The PBOC is able to at least not step in as much, of course, as we given the drop in the dollar.
Yeah,
so
all right.
Well, we'll see.
Yeah, not much change here this morning. Let's switch gears and talk a bit more about the U.S. election as well. Well, Vice President Kamala Harris has raised $200 million in her first week as a 2024 presidential contender, and really highlighting the surge of enthusiasm among Democrats. Meanwhile, Bloomberg has learned that she's zeroing in on a group of potential running mates. Sources tell us the short list includes Arizona Senator Mark Kelly, Pennsylvania Governor Josh Shapiro, and Minnesota Governor Tim Walz.
Yeah, and it's close substantially. When you look at the latest polling numbers, I think if you guys missed it, the Wall Street Journal had their latest polling coming out, and effectively statistically tied if you think about it. So, we have the rolling averages on polling, and the betting market suggests that this is really a tight race. So 48% for Trump, 46% for Harris. As far as betting is concerned, you do have a similar spread, although that is, of course, along the betting websites. This is as of about an hour back. But suffice to say, she's certainly done much better than where Biden was 2 weeks back, relatively speaking there, of course.
Yeah. Let's bring back Ecaterina Bigos. She's still with us, CIO for Asia Ex-Japan Core Investments at AXA Investment Managers. It seems like the fact that Biden dropped out of this race has really kind of changed the game in many ways. Has it changed how you look at overall markets here?
Yeah, it certainly changed the probabilities. I think after the debate that Biden and Trump had, Biden wasn't very well in the polls. Kamala Harris coming into as the candidate certainly has changed some of that, and certainly the market is starting to price in some of the elements of that.
Is that a stronger dollar? I mean, we tend to overthink these things with some distance away, right? People say it's gold, for example. How do I map this out into a strategy over the next 6 months?
I think it's highly uncertain at the moment. Of course, it depends who the candidate that will win. If the Trump was to win, we know the agenda. It's around tax, it's around immigration, and it's around tariffs. And also the ability to push the agenda through, it will depend on the majority of Republicans. And of course, the biggest part that is to some degree to the discretion of the president is the tariffs. Yeah. And I think that's a lot where market is leaning into. And I'd say some of the trades that were, or estimates or expectations were put in place was around that trade tensions that potentially could emerge as a result of that, yeah.
Is that going to just lead to more, uncertainty around this Chinese market then? This threat of tariffs, is that just going to be a big overhang until maybe next year?
Yeah, absolutely. I think that certainly is going to be overhang for China and I think for broader Asian economy. I think it's in terms of uncertainty, the exact outcomes of that are still uncertain in terms of how to calibrate what exactly the impact is. But the general or theoretical estimates is that, of course, tariffs implemented on China and 60% on China and 10% on Asia will be deflationary for those economies as they were looking to compete to still have the goods exported. And certainly potentially inflation, I say potentially inflationary for the economy that's putting those tariffs in place. I think that's the key elements that the markets are watching for, and I think will have some repercussions to the ability of the Fed to normalize monetary policy. With regards to rate expectations on the Fed, we expect 2 cuts this year, but we dialed down the cuts in 2025 because of that potential inflation reemerging as a consequence of that.
Yeah, and the notion that threat exists, we don't know how that actually looks like after, we don't know what Trump's going to, we don't even know he's going to win, for example. But the threat of that on the horizon, and the notion that's emerged is that China's preparing at least some sort of dry powder in case it needs to shelter its economy. In other words, do you think there is stimulus that's about to come and drop into this market as it pertains to China, more than otherwise?
Yeah, and I would say the stimulus, it's a bigger question for China. Is not just Trump-related. If you look at China, China is facing a macroeconomic challenge that I've talked about. Right. Disinflation is a challenge. Consumer confidence is a challenge. Investment confidence is a challenge. They need to address the current issues, not beyond what's going to happen in 2025. If these tariffs were to be implemented, will likely impact the China economy in 2025. But the immediate challenge for China is still 2024 and its growth, considering that consumer confidence is so subdued and they have a risk of that deflationary pressures staying for longer and being ingrained in the economy.
So what matters more for China? The domestic side of things? People say, look, we might not get concrete details of what that stimulus looks like, but the direction needs to be more clear. Whether we shift from SOEs to POEs, whether we shift from supply to demand side stimulus. Are those expectations of a shift is something that you're thinking about right now? And is that what's needed to really revive this market again? Yeah,
and I think that's where the pace and I would say the magnitude of the stimulus that's been in place has been disappointing, whether that's monetary and fiscal. And of course, the monetary has been somewhat restrained because of the Fed. We also had a consequence related to capital outflows. The net interest margins, which they're looking to protect for banks, was a consideration. So certainly some of the elements related to China's ability to use monetary policy were somewhat restrictive in the first part of the year. I would expect a lot more room to be created for the second part of the year. And I would say fiscal needs to do a lot more and direct that fiscal stimulus to consumer. Consumer confidence has been where China has been lagging. We've seen the trade-in program being implemented. Those, again, haven't been equal across the board. We've seen a lot more uptake in white goods, i.e. in bigger items for consumer. We've seen a decrease in auto uptake. And again, I think there's an element where China is reaching that capacity level on absorption of EVs in onshore, and they have to look offshore, and they've done so. So there's a lot of dynamics. It's quite complex. There's not a magic wand to solve this situation, but certainly the theories say they need to do more in monetary stimulus and certainly in the fiscal stimulus for the second part of the year.
A final question. The one market you're most excited about in the region, or one sector?
I would say sectors probably. And we talked about, and I think the world has become a lot more intertwined, and themes have been a bit superior to countries to some regard. And if you look at themes like robot technology, it crossed across the market. The companies that are present in the US, companies that are present in Europe, companies that are present in Japan have been part of that theme, and Taiwan as well. So I would say investors staying above that country drive and more into thematic investment for this part of the year and in 2025, right. It's very well warranted. Yeah.
Is that the same as the AI trade, just very quickly, or is that there's an overlap between the two, or are those completely separate?
I would say it's a broader element of it. We talk about technology, it's AI, but robot technology. Right. We talk about robotizing industries. EVs is much more robot-intensive. You also look at labor costs being more expensive. We see a lot of increase coming from companies to automate processes. But also you have to look at the investment and fiscal stimulus put in place to manufacture chips across the globe, including in the US, and all of those manufacturing structures need to be refitted with new technology, which again I think we think is going to be supportive for that broader technology theme. And again, we shouldn't just say tech companies, but it's AI, tech, and robot technology altogether.
Ecaterina, thank you so much. Ecaterina Bigos there, CIO for Asia ex-Japan Core Investments at AXA Investment Managers. We're checking Evergrande EV, that stock here this morning. It is surging. So they had an announcement on Sunday that individual creditors from the new energy vehicle unit and Smart Automotive have applied to court for bankruptcy and reorganization of the units. The stock is surging here right now, and they're expecting the application to have a material impact on the production and operating activities of the company and those units as well. We got plenty more ahead. This is Bloomberg.
All right, we've been obsessing over gold, silver, and bronze. The color is green, though, going into the open today. We're up 1.5% across, the Hang Seng Tech Index, and as you can see, broad rally across the region today.
Yep, in terms of stocks to watch here today, CATL, those earnings were a beat for the second quarter and really kind of defying the slowdown we're seeing among their peers there. But that stock is still down about 1%. Series also talking a little bit more about their partnership with Huawei and the live plans to invest in that smart car drive system unit. And of course, we just talked about that news of Evergrande NEV filing for bankruptcy there. The stock up some 9%. The open is next. All right, we're getting some live pictures out of Japan here this morning, and we're hearing that Anthony Blinken is actually going to be there in Tokyo. They're meeting with not just his counterparts from Japan, but also we're talking about the Australia and India, the Quad, as you say, as well, for those meetings, of course, after we did hear a little bit more from the security deal that was reached between the U.S. and Japan and Korea over the weekend as well. Yeah, so we'll wait for more headlines and developments out of this meeting. You're currently looking at a foreign minister, of course, there speaking over in Tokyo. Right, just counting down to the open market, under 30 seconds away, and as you can see, we're looking at a broad-based rally across the region. We're up by about 1.3 on the regional benchmark. Japan's doing very well today, did very badly, of course, for most parts of last week. Hang Seng Index at 17.2 right now. I think, keep in mind, I think we did some calculations here in terms of the yuan perhaps remaining under pressure. I think Hong Kong-listed Chinese companies are set to pay $30 billion in dividends this week, so watch out for that. We're looking at declines, though, and just moving against the grain on the CSI 300, 34.04. Industrial profit numbers were out. Bottom of your screens, 3.6%. The 10-year yield is doing 2.17, so that is effectively still at record low numbers. CATL on your screens, down about 3%. Your big mover there. We're looking at, the company reported earnings on late on Friday, so going into, post the close, obviously, and a profit jump. As far as CATL is, I think it was 11% on net income. Could be mistaken. I'll correct myself later and have a look at the number. Okay, Hong Kong and the open here, and we're looking at gains, in the order of about 1.3%. The Hang Seng China Index is now trading at about 6068. The level you want to watch is the 5963 level. So we're about 100 points north of, the index is north of that level. Dollar China is, stronger currency, and as you can see, of course, a decent bid. Not life-changing, but 3.5% on Alibaba. A couple of stocks we're tracking here. Evergrande NEV, of course, its units receiving bankruptcy application. We're down about 3% on that stock. We had this reporting on Prada, set to open a 800
8,000 square meter store in Hong Kong, according to sources. The company square foot. I'm sorry, square foot. Not that they're a big deal, not that big. But I think the mall operator and the company have declined. I don't know. I'm spending too much time on this, really. Jinko Solar.
Clearly, you're excited.
And New Oriental. I can't wait to head over. I can't remember the last time I was in a Prada store.
I don't know.
I mean, I walked past one just because it happened to be on the street where I was. But in any case, 8,000 square foot, K11, of course,
Massive.
which is that fancy,
Still
really,
massive.
really nice smelling mall, I should say also.
And a sign of maybe, a bet on luxury,
yeah.
right? CATL, that was 13% net income growth for the second quarter.
You.
Yeah, just wanted to clarify a little bit. Let's talk a little bit more about what's been going on in these Chinese markets. So Bloomberg has had an interesting sort of scoop here, learning that China is considering a fee hike of at least tenfold when it comes to high-frequency trading. Our Asia equities reporter, Sang-Mi Cha, joins us now for more of this. And what are the details of this so far?
Yeah, the details is that there's going to be fee hike for orders, buy and sell orders for these high-frequency traders. And that means now we have 0.1 yuan, and they're considering to increase it to up to 1 yuan, which is tenfold. And that will be even more so for cancellation trades. And so this comes after a lot of the restrictions that we have seen earlier this year. There were some curbs on short selling. So this would be a little more of a dent to returns for quantitative hedge funds that we have been seeing, that they're already reeling from these curbs that we have been seeing. So the thesis that CSRC has here is more of like how volatility, it's going to be a boost to a lot of this, more trades is good for the market. But then at the same time, they have more advantage. The hedge funds have more advantage because they have access to technology and so more information and the speed. So they're saying this is not fair for the retail-dominated stock market because all the eyes are on the retailers. So this is what they have, the thesis that they have, and this would be key to watch for this market. But what we're also watching is, of course, the Hang Seng Tech Index that we have been looking very carefully last week because it was about to fall into the bear market, but it didn't. It is going up today as well. So that's key. And also after the third planning, we're watching the Politburo meeting.
So earnings, we talked about the CATL 13%. I think Wuxi AppTech is reporting today. I mean, the stock has done terribly. What are we looking ahead to as far as earnings go?
Yeah, so Wuxi AppTech has seen sell-off from last December when the U.S. lawmakers said that some of these Chinese biotech companies are sharing genetic information of Americans, and they introduced a bill that actually could potentially ban these Chinese biotechs from having contracts with the federal government. And that has weighed on the stock. It's lost about 63% this year alone, and along with its sister company, the Wuxi Bio, is the worst performer in MSCI China Index. And so we are watching this carefully because this has a lot of implication, not just on the stock, but it has a lot of impact on the short supply of these drugs that they are producing because Wuxi AppTech works with at least 20 of the biggest global companies. So that would weigh on a lot of the production for advanced cancer treatments and the GLP-1 drugs that everybody's talking about, the weight loss drugs.
Sang-Mi, thank you so much. Sang-Mi Cha there, our Asia equities reporter. In the next hour of the China Show, we'll be joined by, of course, our Marvin Chen, Bloomberg Intelligence equity strategy analyst, to talk us through his latest outlook here on this market. And his latest thesis, of course, discusses the need for more rate cuts for this market to reach, as you can see, escape velocity. Stay tuned for that. That's in about an hour from now.
And let's talk about what's happening today as well. Chinese developer Country Garden is under increasing pressure to show progress in its debt restructuring efforts. It is back in a Hong Kong court today as it squares off against creditors seeking for its liquidation. For more, let's bring in our China credit reporter, Wei Zhou. Tell us more, what can we expect today?
Yeah, so in today's court hearing, a creditor named Evercredit is seeking liquidation of Country Garden. So Evercredit is actually a unit of Hong Kong listed company called called Brandon,
Yep.
and it's filed against winding up petition against Country Garden in February. So the main purpose of this winding up petition is to speed up the debt restructuring process by forcing the defaulted company to come up with a restructuring plan through negotiation with creditors. But the amount involved in this winding up order is only 1.6 billion Hong Kong dollar, which is relatively small compared to the total liabilities of Country Garden.
Yeah, so remind us, what is the court's role here? Are they going to decide based on the progress that they've seen, whether this continues or not?
Yeah, so if the judge, say like meaningful progress in the restructuring, process, it will give Country Garden more room to, explore the debt options with its creditors. But if the judge decides against Country Garden, it will mark a dramatic downfall for Country Garden because no other developer of its size has faced such a threat since Evergrande received a liquidation order from a Hong Kong court in January.
Yeah, and we've seen the Chinese government introduce a series of policy support measures in recent months. How have these policies played out on these distressed developers so far? Is it working?
Yeah, so far we are not seeing much of a progress for this distressed developer. This is partly because China's unique pre-sale system where, home buyers need to pay advance for these homes before their homes get delivered. So once these developers they run into cash flow problems, the home buyers are really worried that they may not get their home delivered on time. The other thing is that we are still seeing China's housing process are declining very sharply. So this fear of further home price drop may, disencourage first home demand. It also triggers rising second home supplies as households they looking to exit their investments. So take Country Garden, for example, we are seeing the company's contract sales plunge another 73% last month.
Yeah. From the year before. Fantastic. Wei Zhou, thank you so much, our China credit reporter there, getting us up to speed and what to watch today as far as this is concerned. In fact, in the next hour of the show, we'll be taking a deeper dive, a closer look here at the property sector amid all these winding up hearings and the outlook for sales and credit profile. Rebecca Tang joins us. She's with Fitch, of course, on those times on your screens in the next hour. Plenty more ahead. This is The China Show. Right, oil markets about 2 hours into the U.S. session. Shanghai crude, of course, is coming online this hour as well. The broad weakness continues from, of course, what we've seen last week. And certainly the events over the weekend not really having an impact so far in the oil markets right now. Yeah, not too much. Of course, we have an OPEC meeting as well, and still a lot of questions in there whether they can actually adjust or are they going to shift anything when it comes to output and production as well. You take a look at what's been really going on in the Middle East. So Israel is threatening further military action after that strike that we saw over the weekend here, striking Hezbollah targets in Lebanon in response to a rocket attack that killed a dozen young people in the Israeli-occupied Golan Heights. Prime Minister Benjamin Netanyahu has vowed to exact a heavy price from Hezbollah, which has denied responsibility for the attack. Let's bring in Bloomberg senior editor Bill Ferry. He's joining us from Singapore with the latest. It seems like we've seen, again, more violence in that area. But then again, I think the door to diplomacy is also open in a bit as well.
Right. There's things happening on multiple fronts now. That attack over the weekend that killed 12 children in Israel, that was the deadliest attack on civilians in Israel since the October 7th attack by Hamas that really kind of started off this fresh wave of conflict. As you mentioned, Prime Minister Netanyahu said that Hezbollah in Lebanon will face a heavy price for that, and we've seen some initial strikes taking place. It remains to be seen if there's more to come for that. On the other hand, there are talks continuing about having some kind of a truce in the Gaza Strip. negotiators from the U.S., from Israel, Qatar, and Egypt were meeting in Rome over the weekend, still trying to hammer out an agreement that has been in the framework of which has been known for several months now. But it remains to be seen whether they can get through that final stretch and actually sign an agreement that would put a pause on this conflict.
Yeah, Bill, I was going to ask whether or not what happened over the weekend and any potential future response on this front affects the Gaza truce conversations.
Well, it's very hard to know. I mean, what's been holding up the Gaza truce negotiations so far has really been this idea of whether a short-term truce really leads directly into a long-term peace agreement. It's had to do more with the exchange of hostages and things like that, and prisoners and things like that. Hezbollah has said, as have the Houthi rebels in Yemen, that if there is a truce or a peace deal between Israel and Hamas in Gaza, that they will stop their attacks. So that's going to be what everyone's watching for. If something can come through on Gaza, whether things will settle down on some of these other fronts.
Bill, thank you. Bill Ferry is there in Singapore for us, our senior editor. Now, Italian Prime Minister Giorgia Meloni has pledged to relaunch bilateral cooperation with China as she began, of course, her first official visit to Beijing. Let's get an update of where this trip is at the moment. Our China correspondent, Minmin Lo, is here with us on set to talk us through what has come out of the visit. It's a 3 or 4 day visit. We're about a day or two in.
5-day visit.
5-day visit. There we go. What's come off it so far?
Yeah, it's quite interesting. Meloni is attempting a reset in relations here just months after she had pulled out of the Belt and Road Initiative under U.S. pressure, saying that it was a serious mistake. It did not yield many of the benefits that it had promised. But now the two sides had signed a 3-year action plan to expand cooperation in trade and investment, in education, in environmental protection and food security as well. And clearly, Italy still sees Beijing's investment as still a very important source of economic growth for Italy. We know the government has been trying to court Chinese automakers to build plants in Italy to boost production there. And the flow of Italian exports to China as well still rests on the stability of the bilateral ties as well. And that's why you see this kind of negotiation going on with Premier Li Qiang there, saying that China is willing to open up market access, but it also wants to see a form of non-discriminatory environment for Chinese companies in Italy as well. And this comes amid Italy's support for that EU tariffs on Chinese EVs and Beijing trying to wrangle more negotiation room here ahead of the November deadline when those tariffs will finally be decided. And Meloni is going to meet with President Xi today. She's expected to raise the issue of Ukraine. Our sources are saying that she sees President Xi as an important stakeholder here, especially in the event of a Trump presidency that could see U.S. pull out its support for Ukraine.
Meanwhile, we've also heard from the vice finance minister in China pushing back against some of these comments from Janet Yellen about, concerns about industrial overcapacity in China, too.
Yeah, so Yellen has been repeating these accusations again at the G20 finance ministers meeting in Brazil. And so we heard the Chinese vice finance minister hitting back. He had a few arguments saying that, number one, China is a force for disinflation when it's able to produce goods that are value for money. And number two, it's also a contributor to climate change as well, especially when the demand for new energy vehicles in 2030 is still projected to exceed the current supply. And he denied that the current capacity strength of China comes from state subsidies. He said there are many other factors, including corporate investment into R&D, innovation, entrepreneurship. And he said the reason why some countries had missed out on this EV play is because they have enjoyed an advantage in traditional auto manufacturing, whereas China didn't, and that's why they sought out these new growth emerging areas. And he also pointed out how there had been inflows of capital investments in other emerging areas in the past, including in IT, shale gas, biopharma, that led to these temporary overcapacity in other developed countries in the past. And so it's common, it's natural to have these disequilibrium in the market because companies are just making their own investment based on projected supply and demand.
Min Lo, our China correspondent there with the latest when it comes to, of course, that visit from Meloni in China. Some other big stories that we're following for you across the region today. The U.S. has pledged the full force of its military to defend Japan and South Korea as the nation's defense chiefs met in Tokyo. The countries signed a deal cementing gains in security cooperation before the U.S. elects a new president in November. It includes formalizing plans for regular military training, enhancing senior-level talks, and building on a deal to share real-time data on North Korean missile launches. Chinese state media say at least 12 people were killed after a house collapsed in a landslide in Hunan province as heavy rainfall continued over the weekend. A city in the northeast also issued an emergency flood warning, while some 27,000 residents were relocated in Liaoning province. Beijing has allocated an extra $67 million in disaster relief for regions battered by weeks of torrential rain. Plenty more ahead. This is Bloomberg.
Okay, welcome back. Breaking news right now. The Country Garden winding up hearing has, well, it looks like the judge has seen progress in the conversations with its creditors. So a couple of things. It will adjourn to January 28 next year. And then the company, Country Garden, expects creditors to agree on a term sheet by September, and it then plans to publicly present this debt agreement by October. So that's so far where we are, and so far that's the plan. We'll see what happens.
All right, maybe some progress has been made. In terms of what we're looking out for as well across these markets, certainly we've been talking about what the Trump trade and what this all means, right? And what is going to be that best portfolio hedge if we do see, in fact, Trump 2.0. It's interesting what the results came out with in this MLIV survey, though. It seems like now, when it comes to haven assets, which would perform best, number one is gold. 53%, or more than half, said gold might be the best trade there. And gold really rising more than 50% during Trump's first term, so maybe that's a sign of things to come. The dollar certainly is still up for debate of what a Trump presidency means. Is it going to be, something that is good for the dollar, given the tariff threats as well, or is there also this sort of talk of de-dollarization as well, which the Trump camp has also talked about, and the Swiss franc potentially there when it comes to that haven bid. But yeah, we've talked about what gold prices have done, right? So basically, you have different presidential terms, and it was during Donald Trump's term where you actually saw that 50% gain or so, which is more than what we saw with Barack Obama, with Joe Biden, but not so much when it comes to what we saw during Jimmy Carter's era and Bush as well. But yes, some history there for you.
Yeah, so if we do another 50% on gold, assuming Trump gets it, right, that takes us to what, 1,400 almost there. But of course, a lot of other factors affect. Yeah. And the world was very different. I mean, and if you had, I think I've heard conversations around comparing him to Ronald Reagan, for example, and of course the golden years of the 80s. But as you can see, gold did terribly under Reagan.
Yeah.
Minus 30%. Maybe Bitcoin.
Maybe.
Wasn't he at this
Well, you thought it was a crypto conference, but it felt like a Trump rally.
A Trump rally, yes.
If you take a look at just what the pictures and what we heard from him, and the big take today really is quite interesting, talking about how did the former president make such an about turn on his views on crypto, right? Before he said it was a crime-riddled scheme and when he was president, and now he's fully embraced it. For one thing, he's definitely talking about this opening, or taking advantage of this opening that, certainly Biden has done during Biden's term as president, this whole crackdown on the industry. So maybe he's seeing that as an opportunity to really kind of take advantage. We know how, this is a very transactional maybe relationship that he might have with crypto. And then there's those NFTs of him.
Yeah, cowboy and superhero non-fungible tokens is really what led Donald Trump, again, down this rabbit hole. And I think at that speech, he said one of the first things that he'd do is actually fire Gary Gensler and replace him with regulators who love digital assets. And I think the quote he used there is, if Bitcoin goes to the moon, I want America, well, he wants America to be the nation that leads the way. And hence, by the way, we did get a sizable move in Bitcoin over the weekend, I think up 3%, and hence we're trading at about 69,000 here as well. But yep, guess more on this later. Of course, you can check this out on today's Big Take. There we go.
Yep, and so we're looking at everything from crypto stocks and whether really it is that Trump trade, and you continue to see this it's Bitcoin rally. We're getting closer to, close to 69,000 here right now, and that really is helping the likes of Huobi Tech here this morning. We're up some 6% as well. Hanwha Investments is also up close to 5%. So, it actually is moving the market in some ways, right? And so it's interesting if you watch these NFTs, they're quite amusing as well, some of the pictures and the stuff that has popped up. In terms of the rest of the markets is what we're looking at in terms of your dashboard and, what's really fueling these markets, and it's really not much. But Hang Seng, at least you're seeing a pretty good rally go through here. We're up about 1%. MSCI China is also by 0.7%. Looks like tech is catching a bid here this morning. And look at those CGB yields, right? 216 for your Chinese 10-year yield, where you're seeing new record lows for that one. 30-year yield is also rallying. We're at 240. Is that a new record low, too,
yeah, that looks to be
for the 30-year?
On the 10-year.
Yeah.
But, I mean, effectively, you go back to 2005, right? So in the current regime of how this economy looks like in its current size and structure, it is a record low. U.S. futures are also getting underway. This big week ahead, big earnings. You have the Fed, you have the Bank of England, you have the BOJ. So more on the top themes to track this week. We're bid across these equity markets this Monday. This is Bloomberg.
Welcome back to the China Show. Here's a look at the HSI just a half hour into the session here this morning. It looks like actually one of the bigger moves that we're seeing across these markets. We're seeing about 1% upside there and doing better than the domestic market here this morning. A shares are also up in similar measure. So we're continuing to see a little bit more recovery after what was a pretty bad week for stocks overall as well, Dave.
Yeah, the conversation really is what among the big items in the agenda this week will manage to get at least the Hong Kong markets out of this rut, at least the range-bound trade we've seen, right? So you have the Fed. Does that help? Is there anything on the central bank decision? Certainly the earnings don't seem to be consequential, at least for Hong Kong markets, although CATL, of course, reported, and we are getting some movement in that stock there as well. Yeah, so it's central banks, it's earnings, and it's Vivian Kong, by the way, which is also dominating
My girl.
the headlines in Hong Kong today.
Oh, man. What a win. What a comeback.
Fantastic
we'll talk
news.
about that a little bit later on, but yes.
In case you're wondering. Not inside baseball, no.
No, we're talking fencing, and Hong Kong won its third gold medal, by the way. But yeah, so, right now there's still a lot of uncertainty, not just around what the Fed's going to do, what the BOJ is going to do, what the BOE is going to do. I mean, those are probably the big three central banks that you have to really worry about in terms of event risk as well. But then you pair that with the earnings season in the U.S. And, we saw the likes of what happened with Tesla last week. And what does this mean for the likes of Amazon, Apple, all these big Mag 7 earnings that are going to be happening all at the same time amidst these central banks and this 32-hour central bank spree, which we're talking about as well. So there you go. Basically, every single day this week, you're going to see a big Mag 7 company report earnings. Certainly, there's going to be a lot of discussions about what this means for the rotation trade that we have seen. Is this something that is over, or can this continue? Just given that it's not just the political concerns, you have growth concerns all around as well. And so there's a lot on tap. You've put also China PMIs in there. It's going to be a pretty toxic mix of news, really, Dave.
Plus the jobs number, I think, is coming out too on Friday, right? So it's, I mean, there's no better person to get us started for this week than Mark Cranfield, who's with us in Singapore to talk us through the current market action. And Mark, among the many things on deck this week, why don't you start things off? What do you think is the most consequential?
We're definitely hoping to avoid anything toxic this week. We're hoping that it all ends up very nicely. Thank you. The Federal Reserve is clearly the biggest macro factor this week. Although, as you say, the tech companies will have a lot to say, and that will be a very big driver, which, in a way, may even be able to diverge from whatever the Fed does. But anyway, let's start with the Federal Reserve, because although there are some people who have been saying in commentary that maybe the Federal Reserve is behind the curve, traders are not yet assuming that to be the case. Traders for now think that the Fed has an objective. They're probably going to go with September with the first rate cut. It's likely to be 25 basis points in line with what they usually do, and then possibly signal that there'll be even more to come before the end of the year. Where that could be altered is the fact that between the meeting this week and the next one in September, there is a lot of data still to come through. At least 2 more CPI inflation reports, 2 more employment reports, more PCE data. There's a lot for the Fed to chew on. So it's possible that if we do get underperforming numbers in the next 6 weeks after this week's Federal Reserve meeting, by the time we get to September, it may well be reasonable to assume that the Fed is behind the curve and they need to go for something much bigger than 25 basis points. There are certainly traders in the market who are already thinking that to be the case, but the data needs to fall in place for them to achieve their objective, which is looking for a 50 basis points cut. There is a lot to play for, so it's not just about what the Fed says this week, what they do this week, but also how they feel about the data coming up in the weeks ahead.
I think there's also a lot of, maybe even more arguably, uncertainty around this BOJ meeting. Governor Ueda, I think, has set a record for not speaking the most ahead of a policy meeting, Mark. Obviously that yen surge, we were up about, 2% last week. Do you think the BOJ has anything that they can do to extend this yen rally?
There also, it's the outlook, which is, again, very, very important here from the Bank of Japan or from a trader's, investor's point of view. So it's almost become a consensus that the market is fully expecting something this week, at least a decent reduction in BOJ purchases of bonds, probably for there to be a small interest rate hike as well, 10 or 15 basis points. But that's largely priced in. You can see the yen move, as you were saying, is pretty substantial. Considering the direction the yen has been going this year, that's a pretty big change. But the Bank of Japan probably thinks that its move to get rid of unconventional policy, this is what it's all about, removing the BOJ, the purchases of JGBs, increasing interest rates, is all about getting away from unconventional policy which dominated Japan for such a long time. That probably means that short-term interest rates need to go higher still, not just this week, but sometime before the end of the year as well. And they need to severely reduce their mountain of bonds which they hold. They own more than 50% of the market, which is, within the G10 world, is an extreme ownership of the bond market, even allowing for what happened with the global financial crisis and people trying to reflate their economies. It's still a very, very large number of bonds. And Mr. Ueda himself has made it pretty clear he doesn't like this kind of policy. So it could well be that he can satisfy the yen market by even pointing towards another rate hike later in the year and getting those purchases down substantially. So that will help to support the yen rally.
Mark, just a final thought, if you do have anything on oil markets, and certainly news on the weekend in Israel, of course, and markets are looking in what direction a response from Israel would be. How consequential do you think developments are there, particularly with oil markets seemingly behaved at the moment?
The risk in the oil market certainly is that people have become a little bit complacent in the sense that they don't expect geopolitics to have much of a say on what. So if you look at where WTI crude is trading down below $80 a barrel. If you look at where we've been over the past couple of years, plenty of time above 90, even above 100. So it's almost as though people are very focused on the demand factor, China in particular. They're worried that demand won't be very strong from China. So prices have gradually slipped down. That means there is no risk factor at all, really, for something going wrong in the Middle East. Not to say that it's definitely going to happen, but if we do get an escalation of tension around oil supplies in the Middle East, the market is not priced for it. So certainly there's much more risk of a big upside move in the near future than there is on the downside. The downside has been priced in pretty much, but certainly there is a risk that oil prices could spike higher.
Mark, thank you, Mark Cranfield, our MLIV strategist, joining us out of Singapore this morning. Coming up on the China Show, we're going to go to our deep dive into the health of China's property sector. We'll bring you analysis from, of course, our very own Kristy from Bloomberg Intelligence and the director of APAC Corporate Ratings at Fitch, Rebecca Tang, joining us next. This is Bloomberg. All right, that news that we brought to you just a few minutes ago, Country Garden's liquidation has been adjourned to January of next year. So this is following that Hong Kong court hearing today. The developer says it expects creditors to agree on a term sheet by September, and then it will publicly present a debt agreement a month after that.
Yeah, and so here is almost our scorecard of the 5 stages of the property plan. And you see where Country Garden is in court and managing to avoid getting relegated to liquidation at this point in time. They've continued to struggle, obviously, amid this prolonged property crisis in China. This graphic, of course, underscores where these companies are along the certain process. Bottom of your screens, of course, is how we're doing as far as that is concerned. So either distress, default, restructuring. In the case of Evergrande, of course, which is the poster child here, in liquidation.
Now, let's bring in our panel now, our roundtable. Bloomberg Intelligence real estate analyst Kristy Hung. Also joining us is Rebecca Tang, director of APAC Corporate Ratings at Fitch. Kristy, I'll start with you. Is there any sort of risk of a liquidation for the likes of Shimao and Country Garden? And could that actually deal another blow to, of course, the confidence on the ground?
Right. I think the damage to confidence is already done when Country Garden defaulted middle of last year. And I think the biggest catalyst from here is still the uncertainty around Vanke's liquidity outlook, because that would be a tipping point that could potentially envelope, other state-backed developers into the crisis. With Vanke, even though, 2024, the debt still looks safe, 2025 and 2026 remain a big question. With the recent wave of policy stimulus since mid-May, we still fail to see a recovery in private developers' sales. Yeah.
Okay, well, let's get the outlook on how things look moving forward. Rebecca, I'll bring you in. What is the outlook right now, half the year in?
Yeah, so we still have a negative outlook on the China property sector.
Okay.
Yeah, so we have still half of the companies that we cover on negative outlook currently. The main reasons for the negative outlook is that we see uncertainties whether the sales will be able to stabilize in the next few months, despite the government's policy measures rolled out in May.
Yep.
So we have yet to see a stabilization or turning point in terms of the ASPs, as well as the high level of inventory of unsold properties in the market, which will continue to hamper on the consumer confidence of home buyers. So these are the great uncertainties that we see, which drive our negative outlook on the sector.
Yeah, given that negative outlook, Kristy, does that outlook impact whether these developers can actually restructure?
Yeah, so I think in July we're still expecting a 20% year-on-year drop in developer sales. That's upon a low base from last year. And if we look at we have wave after wave of stimulus measures, and that still have failed to produce a sustainable broad recovery for the sector. So you see that as the problem of a faltering business model for Chinese developers. If you don't expect sales to improve, then you shouldn't expect liquidity to improve either. And I think restructuring in a way is still, kicking the can down the road. If we don't expect in the medium to long term Chinese developers would be better in repaying their debt, and I think that's what's hampering the restructuring process for a lot of these developers.
Rebecca, in terms of the liquidity part that Kristy brought up, I mean, Beijing has been very public in making available different funding options for the developers right now to plug that cash gap. Has that done anything to improve at least the outlook? What do you see as being the most useful there so far?
Yeah, so in terms of the funding access, we see this is an important consideration for our rating projections. We see the ongoing funding access to onshore banks, but most of the private developers are still having limited funding access in terms of some unsecured funding as they used to enjoy in the past.
Right.
And I think this will continue to be an important consideration in our rating action. Yeah, so we see liquidity buffer will be the main driver in terms of whether we will consider negative rating actions in the future.
In terms of just how the government and the policy measures heard so far, this rescue package, when it comes to buying up unsold homes, for example, I mean, how are you assessing the effectiveness of these policies so far?
Yeah. So we think, the government is in the right direction of targeting the reduction of unsold property inventory in the markets. But so far, we see the scale of this relending program by the central bank to be maybe have a limited effects on the overall inventory level, because that can only absorb a fraction of the overall unsold property. So we see this may have a limited impact maybe in the near term.
Okay, well, at what point do you think whether that's the onshore bond market becomes a funding option, or even offshore, for example? Because we've seen a lot of money raised, and you probably know, right? We've seen a lot of Chinese corporates, not necessarily in property, tap the bond markets this year because borrowing costs have come down substantially. Do you see any notable pickup in fundraising in the debt market so far? Do you expect that to remain not a viable funding option?
Yeah, so I think in the near term, it's quite difficult to restore the funding access for onshore or offshore bond funding access for private developers. But we do see for SOEs, they may continue to enjoy a very smooth onshore funding access, while the offshore funding access may take a bit more time because of the high costs relative to the onshore market.
That's right.
Yeah, so I think as long as sales is not improving, as long as home prices are not improving and the sentiment on the ground remains very poor, investors are not going to lend to these Chinese developers. So we need the fundamental business model to be restored first before we can see improved access to whether the offshore or the onshore funding market for developers.
What does this mean for your ratings? I mean, what really influences it? I mean, obviously, so far this year, we have seen more downgrades than upgrades. This is overall beyond just the property sector, but is that likely going to be the same sort of trajectory for the rest of the year?
I think in terms of our rating action consideration, because for the property sector, we do see potential downside on whether sales will stabilize and whether corporates' liquidity buffer will weaken, and operating cash flow, whether that will continue to be under pressure because of the sales decline. So we are watching for these developments for us to determine whether there will be further pressure on their ratings at the moment.
You guys put out a report. I'm looking at this right now. This is dated in May, and you guys put out a forecast on the housing market longer term. So from 2011 to I think 2020, I think it was 1.2 million. I think it's billion square meters of demand. You guys project that to come in by 30% over the next 16 years. To I think the figure is 800 million square meters per year on average from 2024 to 2040. My question there is, do you think even if we come out of this the next 2 or 3 years, this is an industry that will need consolidation? Like, there are just too many players out there for very little demand moving forward compared to the last 15.
Yeah, we do see the trend of industry consolidation to continue, and home buyers are likely to be biased towards the state-owned enterprise as opposed to the private property companies because of their confidence in the SOEs to be able to complete the properties under development and deliver to the home buyers. Yeah, we do see industry trend to continue to consolidate.
Kristy, how is this going to play out in terms of what you see across Tier 1, Tier 2, even smaller cities as well? It seems like Tier 1 has been where maybe benefit the most from the government measures so far. Is that likely going to stay the case? And what does this mean for some of these smaller cities?
Yes, so with the overall market, we have seen policy measures removing home purchase restrictions in most of the Chinese cities except the Tier 1 and Tianjin and also Hainan. So a lot of the demand in China where households would only be able to buy a home in their own cities, they're now able to pivot their demand to stronger markets, strong Tier 2, or sometimes the fringe of Tier 1 market you can also buy even if you don't have a residence permit there. So we continue to see an inflow of demand to the stronger markets in China, whereas the smaller cities, they continue to be a big problem because they make up 2/3 of China's new home sales. And if their home sales are not improving, you see that still that's the overall drag to the overall housing market in China.
Okay, Kristy Hong, thank you from Bloomberg Intelligence, our real estate analyst. Also, our thanks to Rebecca Tang, their director of APAC corporate ratings at Fitch Ratings. If you are a Bloomberg subscriber, you can also catch up with all of our interviews by using our interactive TV function, TV Go. You can also join the conversation, send us instant messages to our team or guests. If you have any questions, really pressing questions live, we'll try to bring that to our guests as well. Check it out at TV Go. We're keeping an eye out for the election results from Venezuela here this morning. President Nicolas Maduro has squared off against former diplomat Edmundo Gonzalez, who's a stand-in candidate for former lawmaker Maria Corina Machado. Now, for more, let's bring in our Venezuela and Colombia Bureau Chief Patricia Laya, joining us from Caracas here this evening. But, certainly just walk us through what's the latest and how important is this election?
Yes, so we're awaiting results. We think they might be coming any moment now. There's a lot of tension in the air. There was a huge turnout this morning. The crowds forming long lines at voting centers in Caracas and across the country, which dispersed later in the afternoon. Maduro had promised results by 10 p.m., which was about 20 minutes ago, so we should be expecting results anytime. But as of now, both camps have hinted that they are the victors, and there are already large crowds forming outside the presidential palace in a very celebratory mood. So we'll have to wait and see.
Right. Now, if we'll have to wait and see. My question is, so we know what Maduro looks like, for example. We don't know what Gonzalez might look like as far as changes to whether that's economic or government policy is concerned. But just in case it is, of course, Edmundo Gonzalez that does take it, talk to us about the uphill battle that he will have to face, of course, given, of course, that we don't really see this very often, suffice to say. Patricia.
No, absolutely. It would be a huge battle. As you know, Venezuela went through one of the worst economic crises in modern history, a 7-year-long recession that totally decimated its oil industry, which is the source of the vast majority of its revenue. They would have to completely rebuild the oil industry. They would have to foster trust so that foreign investment could come back into the country. They would have to find a way to uphold the currency to keep inflation stable. So, there's a myriad of obstacles that Edmundo Gonzalez would face if he were selected the winner of today's election.
Yeah, and obviously we've seen under the Maduro era this relationship with China. I mean, they call it a sort of all-weather partnership. I mean, how do you see relations with China changing, if anything, after this election?
Well, if Maduro remains president, if anything, they would strengthen. Maduro has reiterated many times that China is a very strong partner to Venezuela. His son, Nicolás Maduro Guerra, just recently visited China, did a tour there, met with many of its top officials. So without a doubt, we would see that not just continuing, but strengthening. With Edmundo Gonzalez, interestingly, he was asked about that in a recent press conference. He said that they would try to remain a cordial relationship with China, but he has revealed so little about what his policies would be. It's hard to know at this point what that would look like.
Patricia, we'll let you go. We know we could get those results any time now, any moment. Patricia Laya, there are Andy's Bureau Chief for Venezuela and also Colombia here. Let's get to your other stories that we're tracking at this point in time here. In the Asia Pacific, to be more specific, Chinese state media say at least 12 people were killed after a house collapsed in a landslide in Hunan, in the Hunan province. That's as heavy rainfall continued over the weekend. A city in the northeast also issued an emergency flood warning, while some 27,000 residents were relocated in the Liaoning province. Now, Beijing has allocated an extra $67 million in disaster relief for regions battered by weeks of torrential rain. Now, the U.S. has pledged the full force of its military to defend Japan and South Korea as nations' defense chiefs met in Tokyo. Now, countries signed a deal cementing gains in security cooperation before the U.S. elects a new president in November. It includes formalizing plans for regular military training, enhancing senior-level talks, and also building on a deal to share real-time data on North Korean missile launches.
All right, we're taking a look at when it comes to some big movers here this morning. CATL, it seems like it's been kind of gaining and losing a little bit here, but we're coming back from a little bit of those steeper drops here. We're down still some 3%, but that's despite those earnings were actually pretty good. It was a massive beat there as well. So maybe, this stock has already gone up a bit too far. We're also watching Series with this partnership with Huawei. That certainly is helping the stock here, and watching SI being rejected by the EU when it comes to the Alzheimer's drug. The stock tanking some 12%. Plenty more ahead. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets heading to that lunch break there. You actually are seeing a little bit of recovery in terms of the stocks. This morning we're up 2% for the Nikkei 225, so that's sitting quite pretty. We're still seeing that strength go on for another day in yen. So we're talking about 153 levels here right now as we count down to this BOJ meeting. But yes, we've been talking about a rate hike. Possibly it's been about 70% priced into these markets here. Keep in mind, it's been a dramatic shift, though. Last week, it was just about 44% odds. So certainly that we're preparing for maybe some sort of action from the BOJ here this morning on the back of what is going to happen after that, the Fed, BOE as well. Take a look at when it comes to some of these movers. So we talked about SI getting that rejection from the EU when it came to that Alzheimer's drug. That certainly has seen sizable drops here this morning. Mitsubishi Motors is also talking about joining this Honda-Nissan alliance, this is according to local media and the Nikkei. And Tokyo Steel buying back shares, and that's leading to a massive pop in the stock right now, up 20%, Dave.
Yeah, because of what's happening in Japan, you are getting some upside across the regional benchmark, which should be coming up on your screens very shortly. All 11 sectors are trading higher today, with industrials, IT, and materials leading the gains today. S&P futures are also actually, in fact, catching a decent bit, 0.5%. So we're off to a good start to the week, although volumes at this point in time are quite light. We're about 25% lighter than usual for this time of day. I believe Thailand is close today, but Thailand isn't up and running anyway at this point in time. Right, Chinese markets. So we're looking at a little bit of strength coming through in Hong Kong, some weakness onshore. Bloomberg Intelligence says Chinese stocks do need more than rate cuts to reach escape velocity amid the shaky recovery and external headwinds. Let's bring in Marvin Chen with us here, of course, who does overseas equity strategy for us. Early this year, the gains have faded. What now, and what's next? What are we waiting for?
Yeah, earlier this year, we highlighted a window of tactical opportunity for China stocks, and now we kind of see that window closing in the remainder of the year, largely because of the uncertainties around the U.S. elections, which may drive volatility for China, and not only China, but for global markets as well. So, policymakers have kind of announced some support measures, and now we think the focus may shift to, how to navigate the next 4 years rather than the next 6 months.
We had the plenum. We had these surprise rate cuts after the plenum. Why do you think those things weren't enough to kind of boost sentiment?
Yeah, so the fiscal reform, the unexpected rate cuts, these are positive, but as our economists have called it, it's a little bang. And, for stocks, we think it still lacks the escape velocity to kind of escape this trading range. So, we've seen these support measures throughout the year, but key data such as GDP is still undershooting. Consumer spending, inflation, the housing sector, these all have not seen material significant improvement. So, until the data begins to show the policy easing taking effect, we think the market may remain unconvinced that any single measure can, change the narrative.
What about earnings or other catalysts?
Yeah, so for that's the challenge we see in the second half. We do not see many positive catalysts on the horizon. Okay. For this earnings season, I think we're going to see more of the same story, which is a tech-driven kind of earnings growth while the broader economy remains kind of under pressure. Large segments of the economy are still kind of operating in this deflationary environment. Right. Consumer sectors, EVs, these are facing price pressures and demand pressures. So, we think tech may be one of the only positives in the upcoming earnings season.
All right. Marvin, thank you. Marvin Chen there, our Bloomberg Intelligence equity strategy analyst. Speaking of tech and speaking of what we've been looking at in terms of earnings as well, CATL this morning, we continue to see a bit of a negative reaction to these results as well. The EV battery makers results, despite defying basically weakness in the sector, with profit jumping 13% in the second quarter. Let's get more now from our Asia transfer reporter, Danny Lee. It was a beat, but there was a bit of a mixed bag in these earnings as well. What did you make of it?
Yes, I mean, the earnings picture, the profitability, a good solid beat, but it's just a sales miss. Revenue dropping by more than expected is what's concerning the street out there. But when you look at analysts, when you see what they've reacted to, they're still very encouraged by that big, strong profitability performance. And by doing so, by a little bit more than what analysts had been expecting. So you can see why the shares have initially fallen about 5% intraday, pulled back well off the lows so far, but clearly that mixed bag. But it kind of follows a narrative of what we've seen with other big battery makers, such as LG Energy, who missed on sales, missed on earnings. So clearly CATL in a much better position, particularly when you look at what it's been able to do on scale with lower cost, developing its own tech and getting better in doing so.
What's the guidance for the second half from management?
So for the second half, it looks pretty strong. That order book is pretty full, and what CATL has to do next is to improve on its utilization on capacity to ensure it can eke out more efficiencies, and that's a good kind of base for them to sit on and develop further. So the second half does look pretty good from the management's point of view. The question is just how can it kind of move forward and accelerate, basically, with its base for the first half.
Danny, thank you. Danny Lee, our Asia transports reporter there. Just ahead here on shows, Italian Prime Minister Giorgia Meloni is in China and she's calling for a relaunch of ties with the country in her first visit since withdrawing from Xi Jinping's Belt and Road Initiative. We're live in Beijing just ahead. This is Bloomberg. Right, so welcome back. You're watching The China Show. Italian Prime Minister Giorgia Meloni has pledged to reset bilateral cooperation with China as she began her first official visit to Beijing. Bloomberg's Italian political correspondent Donato Paolo Mancini is traveling with the Prime Minister and joins us in fact out of the Chinese capital this morning. Donato, good morning from Asia. Nice to have you in the region, of course. How significant is this visit?
Good morning. Thanks for having me. It is quite significant in the sense that Meloni last year snubbed Xi Jinping's flagship BRI initiative, and it is the first visit that she undertakes to the country. She has pledged to relaunch and reset and renew these relations that have kept China and Italy closely linked for a long time. Italy and China have a strategic partnership that has been ongoing for 20 years. There has been a new deal that they signed yesterday for close collaboration for another 3 years. They've signed memorandums of understanding on food security, on industrial policy, on trade, and the message that Meloni is giving out and was giving out yesterday to reporters as she met with the premier at the Great Hall of the People was that she wants closer cooperation, fair cooperation, but definitely a message of patching things up after last year's snub, which was quite difficult diplomatically. Italy had been the only G7 country, the only NATO country, and the only EU country to join the BRI, which angered allies massively. And so I had to walk a really fine line in pulling out of the pact. But I think so far what has seemed to emerge from the trip is that the charm offensive has worked. She will meet with with President Xi Jinping later today. So I think any major kind of assessment of her visit will come from that. And it is also quite... Go ahead.
This is all on a backdrop of the EU also implementing, trade restrictions, the like, when it comes to, EVs in China and the like, too, as well. I mean, how do you see her continuing to navigate this relationship?
It's a very good question. So I think one of the things that Meloni has wanted to project very much since she came to power 2 years ago now is that she can be a very effective diplomat. So on one hand, you have NATO, which has designated China as a decisive enabler of Russia's invasion of Ukraine, the G7 condemning Russia, the EU wanting to de-risk from China, and then Meloni kind of going on a trip to Beijing and claiming that she wants closer ties. I think the broader backdrop, obviously, apart from it being economic in a strict sense of wanting to foster closer bilateral trade ties, is very much political. We reported on Saturday as we previewed the trip that Meloni very much sees Xi as someone that she wants to bring on side in case there is a change of guard at the White House and there is a change in U.S. policy when it comes to Ukraine. She wants to kind of market herself, pitch herself as this interlocutor, as this counterpart for China for major conflicts that are currently ongoing in the Middle East, so Israel, Hamas, Lebanon, but also Ukraine. Italy has been trying to kind of play this foreign policy card a little bit of trying to kind of pitch itself as a mediator in the Middle East especially. So I think that's definitely on the agenda. And then obviously there's the broader trade tensions facet, which you were talking about. And I think it will be interesting to see if there are any kind of deals on EVs specifically between Italy and China, which have been kind of previewed by the government. The Minister for Entrepreneurship was here a couple of weeks ago and kind of said that he expects there to be some kind of closer collaboration when it comes to EVs, but there's been nothing concrete that's been said so far.
Donato, thank you so much. Donato Paolo Mancini, there, our Italian political correspondent, joining us in Beijing and traveling with the Prime Minister this morning as well. And Giorgia Meloni's visit making it to the headlines on Chinese state media as well. That is your China brief, and really topping the headlines. And Meloni's meeting with Li Qiang, the premier, is on the front page of the Communist Party's official mouthpiece, the People's Daily. The paper is, of course, portraying her visit in a positive light, saying that China is willing to work with Italy to strengthen mutual trust and deepen cooperation. But it's also warning against protectionism and calling on the EU to view China's development objectively. There's no mention of Italy's decision, though, to withdraw from that Belt and Road Initiative.
Now, separately, there's also extensive coverage of Foreign Minister Wang Yi's meetings with his ASEAN counterparts, of course, that also took place over the weekend. The Global Times has a series of articles, including one urging the United States to, quote, not stir up trouble in the South China Sea. In fact, in an editorial, the paper says China and ASEAN reached a consensus on peace and development, claiming the South China Sea was not a major topic in meetings at all. It says the ASEAN region's joint communique is close to China's position in terms of resolving disputes through political means rather than resorting to force.
Yeah, and during that ASEAN meeting, Dave, Foreign Minister Wang Yi also met with U.S. Secretary of State Antony Blinken, and they reportedly emphasized the need for stability between the two powers, despite tensions in disputed seas. For more, let's bring in our Asia economy and government reporter, correspondent Rebecca Chung-Wilkins. What came out of this meeting in Laos?
Well, a lot of discussion, not that many concrete objectives, as we sort of expect from this type of thing. But really, the focus was this clash, these clashes between China and the Philippines. Many topics were discussed, but to me, that's really the one that stood out. And you do see that pronounced in Chinese state media this morning, too. So China and the Philippines agreed to a sort of tentative a resupply mission for the Sierra Madre. That is the Philippines' military outpost in the South China Sea. It has been the key flashpoint for confrontations between these two nations over months now. Almost within sort of hours and weeks, there was already contention over precisely what had been agreed. But Wang Yi again this weekend reiterating that the Philippine side is not abiding to the agreements that it made when it comes to these resupply missions. Now, we know this also came up in the meeting with Blinken. It is very closely watched because it really is the focus, the sort of biggest pressure point, I think, in that part of the world for a potential conflict of some sort.
Yeah, tell us more about the meeting specifically with the Philippines and the Foreign Secretary there. How did that go?
Yes, I mean, I think we were not necessarily expecting enormous developments, but really the focus being, like, can they sort of continue to keep talking? And Wang had this interesting line saying that when relationships are as bad as they are, it's very easy for things to become really disastrous and for the conflicts to emerge, but it's very difficult to really improve things. IAEA essentially saying, let's just keep things stable. Things are fragile enough as they are. This is a very fragile calm that we have, and the focus really is let's just maintain stability.
Rebecca, thank you, Rebecca. Chung Wilkins there, our Asia economy and government correspondent. Just want to issue a bit of a correction here in what we said on the latest when it comes to Country Garden. So it was just the date that was wrong. I mean, it has been adjourned. But the date is actually a bit earlier than we had initially reported. It's actually January 20th of next year, not the 28th, as we had said before. So January 20th, mark your calendars there. Still ahead, though, on the China Show, we discuss the highlights from the Olympics in Paris as Asian countries assert early dominance on the medal table. This is Bloomberg. Welcome back. You're watching the China Show, a live look out of Hong Kong. It's clear, but, you know, every day has been raining, I'll tell you that. But clear skies, at least for the markets here today. We're up about 1%, you know, ahead of a lot of event risk this week as well. Not much movement in dollar China as well. We're also learning maybe we're going to see a little bit of different, maybe, on the you know, on
the retail side?
Well, at least maybe, you know, what you see on the other side.
Yes.
Of Central on the Kowloon side. Bloomberg has learned that Prada is renting a 2-floor store at a harborfront luxury shopping mall.
Oh, wow, I can't wait for this.
In Hong Kong. Company's first major new store in the city in years. And Prada did shut its flagship location in Causeway Bay back in 2020, ending what was then one of the city's most expensive retail leases. And at its peak, the brand had 9 outlets in Hong Kong. That's now down to 6. But yeah, some exciting news if you're a fan of Prada.
Count me to be camping out to wait for the reopen of that store at K11, I think is right, right below the Rosewood. Meanwhile, speaking of luxury, other French luxury brands are actually feeling the chill, and I think the broader conversation that Yvonne was just alluding to there in the Chinese market. You have consumers instead, of course, turning their attention to Japan for their shopping. Let's get more on this with Shulie Ren, our Bloomberg Opinion columnist, who's been writing about this, and you talked about the Japanification of luxury spending in China. What's driving that pivot?
Well, the luxury houses, they like to talk about, you know, the Japanese yen is very cheap. That's why wealthy Chinese are going to Japan for a shopping spree. But that's not the whole story. It's really the Japanization of Chinese consumers. I mean, look at Japan after the 1990s bubble burst. The Japanese could no longer wear designer hat to toe like Chinese are now, right? So what they're doing is that they're going for value for money. And what we saw was the blossoming of local brands like Uniqlo, right? And the Japanese have also learned to mix and match. For instance, they will wear like a cheap Uniqlo or Muji that still look quite nice, but you carry a nice Prada bag or Gucci bag, and then you kind of look expensive, right? And that's exactly what a lot of Chinese are doing now. Like we're buying clothes from Taobao, but we will carry a nice bag to look kind of nice. And then also like with social media, it's really speeding up this process. Like on Xiaohongshu, it's kind of like a part Instagram, part Pinterest social platform. They literally teach you how to look like Japanese women who look like they look like that's a phrase. They look like they have $1 million, but without that kind of money in the bank account. You can actually search that on Xiaohongshu, right?
What's the term called?
What's the term?
就是看上去很有钱，但是
What, fake it till you make it? That's another way of translating that, right?
And also they tell you like not to look like a dama, basically like a wealthy derogatory term for wealthy older women who dress head-to-toe designers, because that just looks like they have money but no taste.
Okay. So we talk broadly. I mean, too many designer brands, too many monograms.
It's usually the belt that pushes you over the cliff.
It's like the monogram jacket usually that really throws me off a bit. Okay, no. Anyway. What about price cuts? Is that going to help in any way?
Well, it depends. I mean, Chinese consumers have always been price sensitive, right? Even during the yo-yo years, there were a lot of buyers buy short going to Europe to get designer brands back, right? So it is true that in Japan, the prices are maybe 20-30% lower than China, but it depends on how you cut it. You cannot do something like a private sale or outlet shops because private sales are never private. If one brand has a private sale, people will be like, why am I buying full-priced Burberry? I'm just going to wait for a private sale, which is getting more and more frequent. So I think it all depends on how the brands plan to cut it, like only in retail stores, but not through discount channels, maybe.
All right, very interesting. Shuli, thank you. Shuli Ren there, our Bloomberg Opinion columnist. I've learned these new words, dama.
Yeah.
And
some tips there for me.
For you?
No, yeah.
Don't deck out.
No, because I typically dress completely head to toe in just something that's overwhelmingly in your face.
No, you do that, though. You carry the plastic bag to work.
Yeah.
With your designer wallet inside.
Inside, yes. With nothing inside the wallet. Because no one carries cash these days anyway.
Affordable alternatives. Yeah. There's always that. Let's talk more about the Olympic
Games. That's just trash. I actually just look like trash, but yes.
Yes. If you notice David walking around with a plastic bag, that's actually his man purse. All right. Count for the Paris Games. We've been talking about what a weekend it's really been for a lot of these Asian countries, right? So Japan still leads at the top in terms of the medal count with 4 golds, along with Australia as well. The USA is there with 3, but I believe there's some gymnastics going on a little bit later on today. France, Korea, so making the top 5. What's not there is Hong Kong, right? I mean, that was the big one that basically dominated all my social media accounts this weekend with Vivian Kong, the fencer, winning the gold medal against France.
Well, and what a comeback, too, because if you were watching the match from the very start, she was down, I think, 7-1, and then took it on home court, obviously, of her opponent, right?
Wasn't the president there?
And then Emmanuel Macron, I believe, was also in the audience.
Let's talk about the pressure.
And she took it in sudden death.
Yeah.
Right? She took it in sudden death, and she's certainly become the darling of Hong Kong media, the Hong Kong public, of course, who, Yvonne and I were just talking earlier on, across social media, this is, Vivian's picture is all you can see. In fact, I would even say it slightly went overboard with, you do have some people on social media starting to claim her, right? Which, come on, just celebrate the win, and there's no need to put your own selfie that you've taken with her in the past. If you were not there anyway, I'm just ranting.
We're just proud Hong Kongers right now, right? We're living in this moment, and she's waited 8 years for this. This is her 3rd Olympics.
I think she's gone through 2 major injuries.
Yeah,
she's torn her ACL twice.
I mean, she was the world #1, so slated to win. But yes, what a match! I was watching the highlights when I woke up on Sunday morning, and it's funny, even during the interview, she was like, I just really didn't want to lose really badly. I mean, she's still so humble amidst all of that as well. Also, it wasn't just Vivian Kong, right, who really was a rock star.
No, we were trying to figure out when we woke up, was it Saturday morning when I sent you that message of guess who showed up?
We talked about it on the show, right? Celine Dion. She helped wrap up, of course, that opening ceremony. I thought that was the highlight. I mean, Lady Gaga was also there. She was also great. But, just the fact of what Celine Dion has gone through and being able to sit, basically on the top of the Eiffel Tower to sing to the world certainly brought tears to my eyes.
Quite a moving performance there. My highlight was Snoop, actually, right? Did Snoop actually carry the torch going into the oven? Did not drop it like it was hot, if you think about it as well. So, the Olympics are underway, and of course, we'll continue to bring you all the latest, of course, in the next few days. Of course, we'll bring more events to the forefront. Right. Should we check markets? Should we keep talking about it? Let's start to check markets quickly. Okay, so we are off to a good start for the week. Equity markets, there we go. Alibaba's up 4.4%. Jefferies now sees more catalyst for the stock. One of the biggest movers so far in the Hong Kong session today.
Interesting. All right. The global macro movers is mostly green here this morning on the back of what we've been hearing. Recovery when it comes to the tech shares as well. Commodities are still a bit in the red here this morning, but really it's a softer dollar story, and that really is helping, of course, some of these stocks through after what has been a pretty turbulent week, of course, last week. This is Bloomberg.